Good morning, good afternoon, and good evening, everybody. Hey, hope you are doing well today. This episode of the Note Closer Show. It's Monday here in Austin, Texas. It's a beautiful day. It's humid as hell. I was out walking this morning, and definitely it's like, whoo, the humidity kicked in, especially after all the rain we had this weekend too. Just we're a little saturated like a sponge. My yard is like like a sponge walking through it today. But anyway, guys, hope y'all doing well. I'm feeling kind of festive. It's summery. It's the week after the 4th of July. It's a little bit slower in the note industry because a lot of people are taking this time off for vacations and holidays and just having fun. And it's a little slower. So I always like to look at this time as a time to kind of do a little bit of due diligence, to look at the markets, to look at where opportunities are lying right now or in the future. And while you guys can track foreclosure markets right now through foreclosures.com or here in Texas through the Roddy List FLS online, which gives you kind of a snapshot, you have to look at where things are changing and adjusting. And now over the weekend, I think you saw this last Friday, the Wall Street Journal came out with an article. And let me share some stuff here for you real fast. Let me share my screen because I've got some stuff pulled up here I want to go through. So anyway, like this episode might piss a few people off, and I'm sure gonna have people are gonna argue with me about it, but it's here to talk about the top 100 real estate markets that are gonna burn in the next 12 to 24 months. Now, I don't mean they're gonna go up in flame, they're not gonna catch fire, you know, it's not the end of the world. I mean, it will feel like that for a lot of folks, but when this article that came out this past week by the Wall Street Journal listed one of my favorite cities, one of my favorite places to go hang out and have masterminds at and stuff like that is Cape Coral. All right. And the Wall Street Journal said the worst housing market in America is now Florida's Cape Coral. Now, that's a couple things. Now, what's funny is this image right here. You see this image, that back tower in the center over there is where we host a lot of our mastermind events. It's the Westin Cape Coral Resort. And Cape Coral is a great area. It's right on the ocean, the Gulf of America. Okay. You've got just it's Fort Myers is near there, but all these houses have canals like this. And I bought a bunch of stuff in Cape Coral, Fort Myers, Lehigh Acres, Punta Gorda. I mean, Yahoo Finance listed Punta Gorda as a bad area too yesterday or the day before they came out with their own article. And I don't get me wrong. News articles are all about SEO grabbing, and yes, are we trying to grab a little SEO this episode? Of course we are, but I always like to take it from approach. Now, how can I take the information provided and capitalize it to use it in my endeavors? Because if you go back, if we all could have like a crystal ball, right? What would you do? Well, you would go back to when markets were valued the least and buy so that you rode the appreciation wave, right? Or where housing markets were hit the worst, buy as much as you can at the bottom of the market and then ride it back up, provided you can afford it, right? I know a lot of guys, and I was one of these guys too. We bought a lot of stuff in Detroit. We bought a lot of stuff in like Flint, Michigan. It was cheap, held on to it for a while and sold it more at the top of the market. It's the whole idea of being a real estate investor, right? In Southwest Florida, gone there for years. Like I said, I once lived down in Naples and Marco Island, Florida, really ritzy part of stuff. And what's really caused this area to suffer so much is not only insurance costs because of the hurricanes, and a lot of people had damage with hurricanes and flooding and stuff. When you live on the canals like this, you're going to get flooded just like, anywhere you're living on the water, you run that risk of getting flooded. So insurance costs have gone up. A lot of these areas, a lot of these homes down here are also with investors buying stuff and then turning them into Airbnbs and try to capitalize on that stuff. That's always been the case with Southwest Florida. Florida's always been a big investment side of things. And I think back to 2008, 9, and 10, when Florida was roughly about 30% vacant. Okay. Yes, it was about 30% vacant. And for every dollar invested in Florida, about 30 to 40% of it was outside money coming in. So you've had money come out, you've had prices go up. And what's happening now? Prices are crashing. Prices are getting dropped like crazy. And if you follow people online, maybe you follow my buddy Nick Gurley. All right. Nick Gurley is with ReVenture, the ReVenture app, ReVenture Capital. We've had him on the podcast a few years back. He's one of these guys that talks about the markets. He walks around, he does stuff. It's kind of a doom and gloom. I mean, Nick's a kind of a nice positive guy. Anyway, although I don't agree on his talk about how there's no food in Austin, we kind of, do not agree on that. Plenty of food in Austin when he was living here. He doesn't live here anymore. He lives down in Florida now. He used to live in Oklahoma. So he kind of bounces around, kind of a digital nomad. sort of say. But if you go to his YouTube channel, he talks about a lot of the doom and gloom, prices cutting in Texas, in Florida, stuff like that, areas that are seeing the most about a decline. And I have to give Nick some kudos. Now, some people don't like him. I like Nick. I like Nick. I think some of his stuff is great. I think he's maybe a little dramatic sometimes, but you got to be that a little bit online when you're YouTube to draw headlines. But he does such a great job breaking down specific things, breaking down deals, breaking down price cuts and stuff like that. So if you want to check out his app, it's the ReVenture app. I don't get paid anything for it. But what I love about it is I can pull some information on specific markets, where things are at, zip codes. He's got a really great app out there for you to take a look at. And like right now, you're going to enter your city, zip, or state to track the 2025 housing market with analytics from ReVenture App. Now, I've got a buddy who also knows a realtor who actually pulled the app, did the download dump of all 855 like major metros that ReVenture tracks. 855 cities. That's a lot of information on a spreadsheet. Well, I've got that. And I was looking at the app because one of the things I look at as we as note investors, we see stuff 6 to 12 months ahead of time, right, everybody? We see plenty of stuff way ahead of everybody. And when you look in the foreclosure domino effect, obviously things happen pretty fast here in Texas, but if you look at Florida, it takes a while for God's waiting room to get rock and roll. People that default today aren't going to see the foreclosure market till 6 to 12 months from now. And that can work in your favor if you're trying to sell a house that you're not making payments on, because it'll take a while for them to get around to it. But it affects the value of every house around you. And while Cape Coral is in an opportunity, I think Cape Coral is actually an opportunity zone right now. Maybe not to buy a lot of stuff, but you definitely want to keep your eye on the market, because the more it falls, the more it's going to rebound at, which is just going to happen. Now, I'm going to put an asterisk next to that, because you don't know what insurance is going to do in the state of Florida. You may have to self-insure. That means you may have to buy at a prettier price. Well, the great thing about note investing, we are buying at prices below retail, substantially before what retail buyers are. So I like Southwest Florida. I think there's an opportunity there to buy just more distressed debt, maybe not immediately now, but by the end of the year, and going from there. And it's the same thing across the country, depending on what markets you're investing in, what states you're looking, what cities, is you need to know what's going on with those markets, right? So I thought we would do a deep dive and look into kind of an idea of where the markets are going. Now, this is just a quick snapshot. I took the top 100 largest cities, and then I batch Cheetoed them based on what Nick and his ReVenture app feels is going to be a drop. Okay, and you can see down here where the biggest drops are going to be. It's going to be in the red, right? The light purple is going to be 5 to 11%. Darker blue 12 to 16, light blue 16 to 21, the light green 21 to 24, the yellow is 24 to 28, the orange is 28 to 31, and then the red is 31 to 40. Okay, so you definitely see some hot spots that are going to be dropped. Now, Texas, they think, based on what Nick says, it's overvalued, and I would agree. We've had some overvaluation. We've seen that here in Austin. It's not been a crash like some people like to say here locally, but it has been a price correction. And what I like is the spreadsheet that I have here. I'll go through, and I've uploaded it to Basecamp. So if you're in our WCN membership, you've already gotten access to this tape or the spreadsheet with all that information that shows you, some great information. So let's dive into it, shall we? Let's look at that tape, and we can go from there. So here's a spreadsheet that I uploaded to Basecamp for. Let me make it a little bit bigger for those that are watching here so you can kind of see. And you see across the top here, I want to kind of explain this. So he's got his city, state, the metro, okay? He's got the home price forecast. Now, what that means is on a scale of 0 to 100. If you're at 100, you're expecting a lot of good homes, a lot of prices. If you're 50, you're midway. If you're below 50, you're kind of struggling. Now, New York still has a pretty good pricing. Homecast, LA's dropping. Chicago's above average. Dallas, Texas is down low. A lot of deals, not so much overbuilt, basically, I guess you could say. So that's kind of where it runs at 31% Phoenix. So if you're below 50, you've probably got a glutton inventory that is going to need to be moved or sold on the market. It's been overbuilt. Like San Antonio is at 30. Where is Austin, Texas? Austin, Texas, 28. Now, we've got a lot of more inventory here. All right. Now, what they also had on here, the home value growth year over year. So you've seen some increases. You've seen some reductions. Like Dallas is down 2.8% in the last 12 months. Houston's down 1.3%. Atlanta's down 2%. Miami's down 2%. Got a lot of cities on here that are down percentage points, right? Right? If you look at Austin here, where's Austin? Boom, boom, boom. Oh, I thought it just, there you go. Austin's down. It's only seen 1% growth of the last year. Okay. Nope, sorry. It's down 5%. That was Pittsburgh that's up. So I agree with those numbers. We've seen a dip, not a crash. Okay. Now, what he has on here also, which is kind of cool, is the overvalued percentage. How much, based on his analytics and things like that, is the city overvalued? Okay. New York's overvalued by 6%. California's over by 15%. Chicago's only overvalued by 5%. Dallas is overvalued by 23%. Wow. Atlanta's overvalued by 26%. Okay. Miami's overvalued by 20%. Detroit's by 30%. When I found that kind of surprising. San Francisco's only overvalued by 6%. To get down to Austin is overvalued by 6% because we had a bit of a correction last year, right? Now, another thing it throws in here, which is nice to think, is also, which takes into consideration, is the value income ratio. And what that means is the value of the property compared to the ratio. So like in New York, it's a 7.7 to 1 ratio. Okay, 7.1. It's basically homes are 7.1 times more than the average income in New York. Okay. LA 10 times, Chicago 3 times, Dallas 4 times. Houston's 3.8 times. Okay. Austin is probably a little bit higher at 4.4 times. Yeah. All right. Now, the big thing to look at is the price cut percentage, where he sees prices are going to probably dip the most. Okay. Now, on the next side, here's the population. We don't really need to worry about population, but this here is what you really need to look at, right? What cities are going to be hit the most over the next 12 to 24 months? All right. And I think it's kind of spot on in a lot of cases. Now, there's a bit of doom and gloom, yeah, but there's some opportunity here if you know where to look. Okay. Especially in states that we buy in or markets that we buy in that have a little bit longer foreclosure process. Not like New York, New Jersey, which has 2 to 3 years. I kind of cut that out of the deal. Same thing with California. I'm not going to buy a lot in LA, and I'm not going to buy in Chicago for sure because it's horrible there. But you start getting down to some of these markets, you're going to see a reduction in value. And by a reduction in value, guess what that's going to mean? That means people are going to start being upside down a little bit. People that had a lot of equity in their properties because of appreciation the last couple of years, it's going to come back to more where they don't have a lot of equity. All right. So you're going to see increase in foreclosures that could lead to increase in defaults, which leads to, actually, let me take this back. A reduction in value will lead to, eventually, because people are already struggling to get by, right? They're overvalued. Their house is more than what it's worth. People that are upside down. In some cases, and I'm saying everything is going to be underwater because there's been a lot of appreciation, but it's going to lead to more foreclosures and people looking to sell to get out of the bad situation, especially when there's more inventory on the market. And that's why note investing is nice, because if something's undervalued already compared to where it is, the values come in, say they owe 200, values come in at 150, we're going to buy that at 75 to 80, 80 grand, maybe 75 to 100 upon where it's at, which gives us some flexibility if you end up A, selling it, or B, deciding to hold it long-term for a period of thing, rentals and stuff like that. Of course, you need to know market by market, city by city for that, but it leads to the opportunity of things that are coming up. So that's what I wanted to say. So I just want to go through these top markets to give you a bit of an idea. So New York is expected to drop 11%. LA's 24%. All right, let's rank these. Actually, I gotta. Oh, I know what I did. I used AI. I used my AI chat bot. I uploaded this list to them, and I said, okay, where are the cities? Let me pull this up here. I should have it still up. Did I not? I may have closed it down by mistake. Okay, so what I did is I went to ChatGPT, and I uploaded the spreadsheet. Okay. And I said cities that have over 1 million. Okay. Give it a second to pull up here. There we go. So these cities have the biggest price cuts. I expect to see the biggest price cuts percentage over the next 12 months. Phoenix, Arizona, reduction by 39%. Denver, Colorado, 38.6. Portland, Oregon, 36. Salt Lake City, 36%. Tampa, Florida, 36. Austin, Texas, 36%. Jacksonville, Florida, 36. Charleston, just under 36. Dallas, Texas, 35. Colorado Springs, Utah, 34.80. Can you give me the top 25 markets? Let me type that in there and let ChatGPT do its work. There you go. So you see more of these. So Minneapolis is going to hit Seattle, Washington, Detroit, Michigan. No, just ranked it by population. Sorry. Can you give me the top 25 markets with the biggest? I got to state this properly. Second here. There we go. Now you're starting to get down here. So Riverside, California, Boise, Idaho, Riverside, California's in there twice. I'm getting lazy. Boston, Ogden, Utah, Chattanooga, Indianapolis, Raleigh, Atlanta, Columbus, Reno, Orlando, Charlotte, Sacramento, Las Vegas, and then we get into Colorado Springs. So these markets are expected, and that's where you have to look at things. I like Orlando. I think Ratland's a great place to probably buy. It's inland. Yeah, you probably still have a little bit of issues with insurance, but not as much as would say Cape Coral. There's still plenty of people flocking to, Universal Studios and Disney World and Epcot and all this stuff. So this is thing. Charleston, South Carolina. Yes, you might have a little bit of trouble with the insurance there, a little bit. Same thing in Jacksonville, Florida. But plenty of people are still moving there, and people still need a place to live in a lot of cases. So that's what I wanted to share with you guys looking at this. Is there any questions about where you guys are looking? What states are you buying in? Let me make sure and enable a chat, which I probably forgot to do. And it's even got this spreadsheet even has smaller cities. So if we go back over here to the spreadsheet and just rank it solely, all right. We just basically solely do re-rank it by cities, not population. Custom sort, let's just do. And then you'll see. So like some of these cities, I don't know where the heck they're at, but like it may give you a little bit more of a granular level in the market. So Vermilion, South Dakota has a below average home price forecast that's overvalued by 15%. They're going to see price cuts because it's only 15,000 people. That's another thing to keep in mind. Population is a little small in that one. Okay. But dropping 44%. Midland, Texas. Okay. Dropping 43%. I could see that with oil and gas, stuff like that up that neck of the woods. Let's go to another. So Altoona, Pennsylvania, dropped 42%. Dubeckway, Iowa, 41%. Roseburg, Oregon. See, Roseburg is in here. I mean, Oregon's in here twice. Phoenix, Arizona. Denver, Odessa, Texas. Sevierville, Tennessee. I don't know where that's at. I haven't heard of that one. Decatur, Illinois. Portland. You can see these cities. Wildwood, the Villages, Florida. Oh, they're overvalued. They're by -4%. Oh, it's actually undervalued, I guess. But they're going to have about a 36% price drop based on what they think. Okay. Well, if you ever wanted to move to South Florida and wear there you go, your pink flamingo shirts for the ladies or the gentlemen, there you go. Now's your opportunity. Start looking for discounts there. Let's see about, looking at this stuff. This is meant to be an opportunist. That's what I'm thinking. Now, obviously, what do you do to use these things? Well, the thing to keep in mind is you may want to avoid some of the higher valued cities. And when you pull comps, understand that if you're in a longer foreclosure market and you have longer days in the market, you've got to figure a reduction in value. what the asset is worth today versus what it's worth in 6 months. It's probably going to go down a little bit. The value's going to go down. So if you value it at 150, you probably need to value it at 140, 120 in the next 6 months if that's the way it's going. I'll give you a great example. I had a guy send me a property in Aransas Pass, Texas. Now, Aransas Pass is a small community down where I grew up. I've been looking for assets down there. It's a 3-bedroom, 2-bath, like 2,100 square foot house. And he has it for sale for 104. Now it's vacant. It needs a little bit of rehab update, but it's not such a bad looking house from the photos he posted. Decent looking. It's on a half acre too. Not a, I mean, you've got some next door neighbors. The thing about it, it's unzoned. So right next door is a mobile home, and across the street is a couple mobile homes. So it's not so bad on that for the most part. But the comps he said the comps were at 270, 250, and stuff like that. Well, when I look at the properties he gave his comps, those are in your cookie cutter neighborhoods. They're all brick homes, same square footage, same bed bath, but ideally not the same type of community, right? So it shows his comps are off a little bit. And that's what you got to look at. Look at your comps, look at what's sold, what's going on. Days on the market is going to become very important here in the next 12 to 24 months, knowing what can move for the price. And you're going to see a big difference between a value and then quick sale price. If you hang around, this is what it'll be at. But if you need to do a 30-day quick sale price, here's the difference in the two, and you got to figure that into your value. So don't be surprised if markets are dropping. The idea here is to take a look at these things, identify, hey, where's the amount of distress, and where to start targeting those markets, start putting your feelers out for things in those areas. If you like, you're looking for something in those areas, now's the opportunity. I think Southwest Florida, it can be the opportunity. I haven't bought much in the last 2 years there because I think it was overvalued. Now you have to look at where things are going to be at insurance-wise and how far is it going to crash and how's it going to affect things. So, and then looking at these houses too, how many of them have been flooded? If you can stay off the water, you're probably going to be better insurance-wise. But a lot of those places are in the floodplains, and it's just going to be an extra expense to add to your bottom line. So one thing, making sure you reach out and talk to your insurance companies, your forced place insurance companies right now. Are they insuring in Florida? Who would they recommend? And start getting an idea of value to what that cost is going to be, and add that into your expense lane, especially when you're making offers on note tapes. Okay. Any questions, any comments, any concerns, guys, out there for you? This is meant to be educational, not to be a gloom and doom. I think when markets do go burn, it leads for an opportunity, especially for us as debt investors, to come in, buy that distressed debt at a bigger discount, and then work our magic in either keeping people in their houses or taking properties back and getting creative in the back end, hold them for a while, foreclose and selling them, renting them or owner financing, whatever your strategy is to do that you'd like to do. There's some definitely opportunities out there for you to take advantage of. All right. But the thing is too, if you're looking to buy a house, there's the opportunity. Hey, there's going to be, opportunities for you to probably pick up a distressed asset or an asset that you can pick up at a bigger discount now or in 12 months than you would now going forward, and going from there. Let's see if there's any comments on those aren't watching live on YouTube now. Hey guys, thanks for watching live on YouTube. There for you. And the reason I bring this up too, guys, is I can remember back to 2008, 9, and 10 when I was down in Southwest Florida. I was down living with friends, Jim and Wendy. They're in Marco Island. We were looking at tapes, hundreds of assets from several banks: Banco Popular, Oceans Bank, U.S. Century Bank, and they had hundreds and hundreds and hundreds of notes for sale at huge discounts. We were buying stuff at 5, 10 grand back in the day, and then going through the foreclosure process, which would take 12 to 18 months on that aspect of things. And so that's something to keep in mind. We bought at the bottom, and it rode the wave up, and did that in quite a bit of stuff there in Florida. So you can take that same opportunities. Keep an eye out, do some research on the markets you're big on, understand, hey, if you can buy something cheaper than anybody else's, that gives you a lot more flexibility to make sure it gets sold at a cheaper price, or to get people into it, renting it from you at a little bit cheaper below market rate, but it still makes sense for us when it would make sense for the traditional buyer. All right, everybody. So go out, take some action, guys. Hopefully it was valuable to you. Like I said, if you're part of the WCN membership group for $97 a month, you've already gotten access to the tape of 855 addresses. Those are posted in the Basecamp group for you. If you're not, you can get signed up for it at noteumbrella.com. We are here to help you take your business to the next level. So Go out, take some action. If you have any questions about that list or spreadsheet or opportunities, feel free to book a call with me at talkwithscottcarson.com. That's talkwithscottcarson.com. And we'll see you at the top, everybody. Bye.
Hey, real estate investors, this is Scott Carson. I'm known across the country as a note guy. For the past 20 years, I've been buying distressed assets, primarily non-performing notes on residential commercial properties. And if you've ever wanted to learn how to dive in to start buying non-performing notes from banks, hedge funds, or other investors like yourself, then there's no greater place than to get the nuts and bolts, the A to Z, the 1 through 99 place to get started. It is our virtual note buying workshop. We've been teaching this class since 2010 on how to find, fund, flip non-performing notes, how to get banks to call you with deals that you can cherry pick. And no, you don't need millions. No, you don't need a lot of experience to start looking at non-performing notes. We get lists of notes from banks, hedge funds on a regular basis, not one or two or three or four, but hundreds of deals that we can evaluate and cherry pick. Whether we're looking for performing notes or non-performing notes that we can get reperforming, or non-performing notes you can foreclose and take back, whatever your niche or whatever you would like to focus on, we can help make it happen at the virtual note buying workshop. It's a 3-day class. Our next one is April 18th to the 20th. It's actually online live via Zoom. You get signed up by going to notebuyingfordummies.com. That's notebuyingfordummies.com. Day one is all about how to find these assets. How do you find asset managers? How do you find lists of people to reach out to that you don't have to spend thousands of dollars on postcards or letters that you waste money on? We don't do that. Day two is all about raising capital and marketing and how to create a business that feeds itself, that you can do part-time, 10 hours a week, 5 hours a week, depending on what your focus is. We'll show you a game plan to achieve deal flow coming in on autopilot versus you having to send a ton of money. And also, we'll show you how to raise capital like nobody else does. And then day three is all about the flip. How do we structure deals? How do we evaluate a tape to find the deals from the duds? All right. We'll show you what vendors to use. We'll give you a 200+ page manual, contracts, sample forms, all the stuff that you need to be a lean, mean note buying machine when you get wrapped up. Now, yes, this is live April 18th through the 20th online via Zoom. Get signed up today. We'll send you the replays of the previous online workshop so you can start learning, start evaluating material, and get rock and rolling. And if for some reason you don't like our class, we have a 100% money back guarantee involved with it. If at the end of the first day you don't like what we talk about, you don't think it's impactful, just let me know. We'll refund back your tuition, no questions asked. We don't want your money. We want you to become a note buyer. We want you to become a lien lord, all right? Like I said, if you're tired of dealing with toilets, tanks, and trash outs, you don't want to deal with renters, then becoming a note investor is the path for you. Everybody evolves into a note investor at some point, but there are plenty of opportunities out there. There are millions of non-performing notes that you can cherry pick. No, it's not all junk. It can be small value all the way up to $1 million homes or $1 million apartments for you. So much opportunity is taking place right now in the chaotic market that we see. And who's going to come out on top? Note investors will. So take the time, get signed up today, April 18th to 20th. Go to notebuyingfordummies.com or go to our website, weclosenotes.com, and sign up for the virtual workshop there. As always, get signed up today. We run discounts all the time. The cost of tuition is you plus your partner or spouse. So get signed up today at notebuyingfordummies.com, and we'll see you at the top.